following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, we are back, everybody. NinjaTrader Live. My name is Jim Cagdina. Joining us from somewhere in Ireland, Créde, sheehy-kelly. Créde, how are you?
I'm great, thanks, Jim. Delighted to be back on again.
Yeah, I haven't seen you in a while. How's things been?
Yeah, good. Been busy. Looking forward to a little break now next week over the holidays. So yeah.
All right, I love the website. New website, hit the street.
Thanks. It took quite an amount of effort to get it out, but it's there finally. So yeah, there's a lot more resources on it actually for people. So hopefully it's a bit more of a better experience.
So are you are you the type that's I'm going to do this myself, or do you have someone help you do it?
Oh God, no, not with tech. I had photographer and web designer and everything else. Yeah, that's beyond my level of skill for sure.
Okay, and for those of you who are new, have not met you before, talk a little bit about what you do.
Sure. So I'm a high performance psychologist, but I specialize in coaching traders and online entrepreneurs. And really, I don't teach anything on the technical side of trading. It's all on how to master your mindset for peak performance. And so my background is qualified as a sports psychologist and worked in elite sport for years, and then kind of moved into the trading arena. And now I spend most of my time pretty much working with traders to help them become more disciplined and consistent in the market.
Got it. Makes total sense. So let's kind of focus in on the trading part of it. One of the things that it happens to me at the end of the year, as we get closer to the holidays, is I don't want to say I get tired, but I get tired, right? We do the same thing every day, every morning, and then I do the same thing every afternoon as part of my my research and stuff. And it's vacation is coming up. I'm going to take some time off. I know I'm going to hit the street running in January. But for traders, there's a thing called the daily grind, I think, and that's something that we need to be prepared how to handle.
100%. I think that's true across the board. Like, whether it's trading or sport or business or any arena, I think this time of year is definitely a time where people need the break. And sometimes traders in particular, or people who are very, A-type personality, high achievers, sometimes they don't prioritize the break as much as they need to for peak performance. It's actually that periodization of performance. So having intense, periods of focus and then actually taking downtime and shutting off is really important for peak performance. So sometimes people, it's funny, even you're saying, I'm not tired, but I'm tired. Sometimes even people feel a bit funny about saying that they need the break. And from a high performance perspective, it's absolutely necessary. And it is actually a good idea to shut off as much as possible for a week or whatever time you designate for it.
Yeah. So is this something that I should be doing every quarter? I mean, is this something I should do periodically? At least over here in the States, folks tend to save their vacation time or their PTO, whatever you want to call it, till, from Thanksgiving till the end of the year. Or you save it, you bank it, and then you spend, you take a longer period of time. Maybe if you have kids, you'll do a spring break thing. But should there be a regular cycle of rest?
So that's a great question. What I would say is there's kind of the macro level of taking the actual vacation days and, switching off fully. And that's really important. So I think people, even when they take it, there may be a lot of people don't actually switch off for that. They're maybe checking the markets or they're doing a little bit of trading or that kind of thing. So it's important to really fully give yourself the time to switch off whenever you take that. But it's actually, or the approach at least that I would encourage people to take is to actually in the day-to-day, like you're talking about the day-to-day grind, is to build in more downtime and periods of sort of lesser intensity throughout the year. So it's not as black and white as either I'm trading, I'm working really hard, or I'm on vacation, but actually sort of stripping back the level of intensity sometimes in your day-to-day or week-to-week life. So just to give a concrete example of that, on a coaching session recently, I was talking to someone who was finding they were mentally fatigued, on Thursday and Friday, come the end of the week in their trading, and that was impacting their trading, and they were breaking the rules because of it. And we spoke about that person was actually doing like extra research and reading and learning, like watching YouTube videos and all that throughout the week, every single day, thinking that it would help their trading, like that they would have all of this extra information and it was learning and it was helping things. But we actually figured out that that was impacting their mental energy. And so by the end of the week, what they were gaining in terms of learning and doing research was actually starting to impact them at, if you want to call it, competition time, when they have to turn up and perform and execute in their trading. And so they stripped that back and they found that they then had higher energy levels at the end of the week. So it can be something as small as that. It doesn't need to be as black and white as, only taking vacation once a year or not.
Yeah, that makes sense. I mean, we're making quick decisions here. We're constantly vigilant. We're focusing for whatever time frame we decide to trade, right? We're really in that kind of zone. And I found myself, I'm doing great Monday, Tuesday, Wednesday, even Thursday, and then by Friday, sometimes I develop this nonchalant attitude, like, we'll see what happens. And I know that either don't trade that day or don't have that attitude, but it just happens sometimes.
Yeah, and that could also happen for people at the end of the year as well. So you've got, the end of the week time frame, we've got the end of the year where it goes either way. So sometimes people are like, I'll just, I'll sort of let myself off the rules and see what happens. Or it goes the other way where they're trying to, on a Friday, make up for losses during the week and end the week green. And so they go harder on breaking the rules, or same at the end of the year. So one really simple thing that I would encourage people to do is rate, and we've spoken about this before, is rate your PEMs every day. So this is your physical, emotional, and mental state out of 10. And you do it every single day before you trade, win or lose, however the previous day has gone. And what that's doing is just giving you a baseline, like a check-in with yourself, a bit of self-awareness in the morning to know what state you're in. So it could be that you get to Friday and maybe mentally and emotionally, or even physically, maybe, you've run out of your physical energy for the week and your scores are low. That would be an indication then that either it's a day not to trade if they were really low, or else just to be more vigilant about the possibility for breaking your rules or emotion-based trading.
So you're ranking yourself, right? And so you have to be honest with that ranking.
Yeah, and it's not even so much like some people are really harsh rankers, and so it's not about comparing between traders. It's just about having some sort of benchmark for yourself. So like for some people, it could be that a score of 5 or less, on average score of the 3 means that they shouldn't trade. Whereas for someone else, it could even be 6 or less. So it's kind of about doing this over time and creating patterns of data, and then understanding the link between, okay, this day that I broke my rules, this day that I moved my stop, or all of the days that I move my stops, I tend to be lower on an emotional rating. So there's a link here. So let me be more wary. When I score myself lower in the morning before I've ever entered the market, I know that I have a potential heightened tendency to remove my stop loss, for example. So the power of it is really in tracking the data over time and understanding what the patterns are for you.
Yeah, and that's a discipline, right? I mean, a lot of people, including me, are, have to really, really focus on being that disciplined, right? Writing something down on a piece of paper or putting it in a spreadsheet or something like that to kind of gauge where you're at mentally. That takes a lot of discipline.
Yeah, it does. It's like creating a new habit. And I think like when you actually think about it, it's something quite simple. It takes probably less than a minute to do, but it is about just building the habit of doing it. And probably the first part of that is understanding how powerful that can be, because it sounds like such a simple exercise, but it really can save you some days where you would have entered the market and, gone on tilt. So the way that I approach trading psychology is kind of tactical. So even though we're talking about the mental side of things and performance psychology, and that can seem quite abstract, everything I do in terms of the actual exercises and techniques that we use with people are very tactical. They're systematic. They're about developing systems, pre-trading checks, pre-market mental preparation routine. And they're all things that need to be implemented habitually so that you can get the full benefits from them.
Yeah. By the way, I've heard from a couple of different folks. Have you ever heard this phrase, 21 days makes a habit?
I have heard it, and I'm going to bust it. It's not true. There has been research done around habit formation, and I think the 21 days, unfortunately, isn't true. It takes a good bit longer than that to really bed it in. I think if you get 21 days under your belt, you're doing very well. But there's some research that says it's 8 months. There's some research that says it's like 70 something days. But I think with developing habits, it's really about picking one thing that's going to be impactful and then giving your laser focused attention to that one thing and making that a habit. Often people make the mistake of deciding that there's these 5 things that would be great for them to do. They go all guns blazing for a week on, all of the different things, and then it falls apart because it's too many things to focus on. So it's better actually to take a layered approach. Like let's say it was rating your PEMs. You just start with that, you get that going, you keep that going for 6 weeks. And once it's become integrated into your routine, then you could look at introducing the next thing.
Yeah, no, that totally makes sense. I'm a little bit more fortunate than most because I get to work within this framework of the shows in the morning. And, well, it's my job. I have to do it. I don't have there's no, I don't have any discretion. I can't just say, I'm sleeping in today, Mike. Good luck, right? So because I have that mandatory framework, that means my pre-market research, I have to have that. So at least I sound relatively intelligent when I go live, right? And so that helps me a lot. And I guess my question would be then, a lot of folks don't have that preset framework where they have to do A, B, C, and D.
Yeah. And that is one of the challenges of, if you want to call it self-employment, like a lot of retail day traders are effectively self-employed. So I think that the first thing to build, and often I'll work with clients on this as, one of the first things that we work on, or the foundation of high performance, is actually having a structure to your day and your week. So actually defining the hours within which you trade, defining how long your pre-market prep will be. So that would be including both the technical parts of that and the mental preparation. Even having rules around, maybe it is that you take 2 breaks during the trading window and you step away from the desk, or some people add in doing some exercises just to refresh their focus, things like that. So if you can actually build that structure first, and even that's the first habit to develop, you're holding yourself accountable to that. So this is a skill that you're actually trying to build and perfect. And then once that foundation's in place, it's easier to start adding in other pieces to that.
Yeah, and that cuts crosswise with the idea of, hey, I'm going to be a day trader, man. My life, it's an easier lifestyle. I'm going to go and make some money and then do whatever I want to do in the afternoon. When the opposite is really true. It's like, no. You gotta wake up at this time. You have to do this, A, B, and C at this hour. The freedom element is a little misleading.
I totally agree with that. And it's the same with entrepreneurship. People think, I'll go out on my own and that will mean I'll have time freedom and all of this autonomy. And actually, it's nearly more work, at least at the start. So I think when people can actually have realistic expectations around that, there's still a huge element of being your own boss. That's amazing. And, as someone who is my own boss and prioritizes that, I definitely, that's something that is great. But there is the downside of having to be very disciplined and structured. And I think the quicker that people can realize that that is a skill that has to be learned, and that it's not as much time freedom as you might anticipate when you start out on the journey, then it's easier to figure out how to best work within that.
Yeah, I mean, I remember back when I started on the floor, the Chicago Board of Trade a long time ago, before the electronic stuff. I was in the Treasury bond pit. It was really big. It was the largest pit in the world at the time, and we had, the open was like 7:20 in the morning. It was early. So what happened was a lot of doctors and lawyers and professionals would come in and trade for that first hour and then leave and go back to their regular job. And guess what? Well, they're really smart people, but they didn't do as well.
Yeah. And even that fatigue that we were talking about, sometimes people maybe overestimate the amount of hours that they need to spend trading. So when you have that structure, you can actually be much more efficient with your time. So you don't necessarily have to be sitting in front of the markets. Well, you definitely don't 24/7, but even that idea of, 9 to 5 or an 8-hour shift in front of the computer, what I found is that the higher performing traders, well, especially from a retail day trader perspective, actually have a shortened window. Like they have a few hours of a window of trading time, and they give that a really intense blast of focus, and then they step away and do other things for the day. But as long as they consistently do focus and do show up for that trading window day in, day out, then they get the gains from it.
Yeah, but they still have to do the prep. They still have to do the post-mortem, if you will. How did I do? What did I do right? What did I do wrong? And it's still elements that I think you got to do, no matter if you're trading just pre-open for an hour or you're trading 8 hours a day.
100%. So that's actually, sorry, I should have clarified that. When I'm saying about that trading window, I'm also including, they'd have the time allocated for the preparation and the time allocated for the daily review. But even in that, sometimes the daily review for people stretches to an hour, and then they kind of skip it because it feels like that's really overwhelming and they're tracking too many things. So even making that more efficient and making that a really impactful 15 minutes of a review, but doing it consistently every day will bring better returns to your trading than hit and miss of, doing a full hour review 3 days a week.
Yeah, that makes sense. So let's shift just a tad bit toward anxiety. Now, some people, feel this seasonally. Other people get anxiety in life for whatever reason, not randomly, but periodically throughout the year. How important is it to recognize that you have anxiety, that's an anxiety level different than normal, and what should you do about it?
So super important. And I'll just differentiate between, so there's like clinical level anxiety, which would be actually, something that you'd be working with a psychologist for, and that it disrupts people's daily functioning. So when we're talking about anxiety here, I'd be talking about the type of just heightened anxiety that people might experience that fluctuates, that, isn't nice to experience, but isn't necessarily like a huge problem for their day-to-day functioning. So I would say anxiety, but also all of the other emotions that contribute up, if you're feeling fear about trading, if you're feeling extra stressed because of personal situations that are going on, maybe stress in your relationships, it's really important to be aware of how the person is feeling. So I always differentiate between the person and the performer. So the performer is the trader who is there to, perform in the markets, to execute the trades, and is performing under pressure. But you're also bringing the person to the market as well. And so that's the father, mother, brother, sister, whatever you want to roles you have in your life, who has all the stresses of just normal day-to-day functioning. And that can include those moments of anxiety or weeks of anxiety, and low mood and, whatever else, just from the daily stresses of life. But it's really important to actually manage that, both from the perspective of just personal well-being and fulfillment, but also from the perspective of the performer. Because let's use the holidays as an example. So a lot of people actually experience heightened anxiety around the holidays, whether that's because they're spending more time with family where maybe there's strained relationships, or there's comparison going on. You're at family gatherings and people are asking how your job is going, and you're trying to justify that trading isn't gambling, and things like that. That comes up a lot with the traders that I work with. So there can be heightened anxiety there. And if you're already heightened from the personal perspective in terms of challenging emotions, and then you go and enter the market, it's not like you're starting from scratch and you have all this bandwidth to withstand pressure in the market. You're actually going in with your cup like nearly full of anxiety or pressure or stress. And so any small thing that happens in the market then can easily just tip you over. So from both perspectives, it's really important to develop self-awareness and that kind of relationship with yourself, so that you are in touch with what emotions you're feeling at any one time, and when they're getting a little bit, out of the range where you'd need to do something about them to manage them.
So do you think also, though, like going into the holidays, people do more reflection? Like, how did I do this year? What am I doing with my life? Should I still be trading? Should I be trading more? Do you think there's more reflection at the end of the year?
Yeah, absolutely. Especially like you say, because people are reviewing how this year went, and depending how the year went, that can be a good thing or a bad thing. So if someone feels that they fell short of their goals, regardless of whether their goals were maybe unrealistic in the first place or something, then that can create a lot of tension and stress, disappointment, but it can also force that tendency to try and close the gap on it before the year ends. And then if it's been a great year, the review and reflection is really important. If it's been a great year, then I guess, you also want to make sure that you do just take that win have the break and don't try and push that a little bit further. So often that comes up as a challenge for traders as well. It's not always about losing money. Sometimes when you're winning, there's the tendency to just see how far you can push it. So that also has to be managed. So I'd say that the reflection and review is a great practice, but has to be sort of paired with a strategic review that actually produces some sort of helpful actions as a result of it. And also paired with that actually taking a break no matter what way the year went for you.
So that's a good point. Like I'm coming into the holidays and let's say I had a good year and I'm like, all right, now I'm gonna press the pedal to the metal. We're gonna go out with a huge bang this year, Christmas presents for everybody. And then my behavior as a trader changes.
Yeah. And again, that can happen on a micro level day to day where you're just having a great day and you try and push it too far, or on the macro level of end of the year and wanting to push it. And that is a challenge actually that a lot of traders experience. And again, it comes back to whether you're doing that because you're losing or doing it because you're winning. We all have hidden motivations as humans, and they're usually the things that create indiscipline in trading. So, you think your logical mind thinks it's about just making more money, but actually it's about all these deep subconscious motivations that humans have, and they're projecting them onto the market. So for example, someone who maybe didn't have a good year and they're suddenly at a subconscious level, they're trying to make up for the fact that, they feel like a drop in self-esteem because they aren't where they expected to be, or they're trying to impress their family and have good results to be able to talk about to justify the profession of trading. They're all stresses that I see people deal with. And so they're like hidden motivations that could impact what you're doing, so that would take you away from executing your plan and that would make you focus more on the P&L. Or even for some people, it's actually closing the gap. Like they might have a bigger trading goal in mind in terms of money that they want to make within a certain time frame. And then when they're doing well, they feel that they actually can close that gap quicker. So they're motivated to try and shorten that gap and, oh, well, I thought I could make that in 5 years, but actually I'm doing so well. Maybe let's see if I could do it in 3. Let's see if I could push that further this month because I'm on a roll. So you have to always be aware of what are the hidden motivations that you're projecting onto the market. And then that helps you stay disciplined.
Yeah, no, that's interesting because for me, and again, I'm going to do a self-diagnosis right here live. For me, my anxiety, I don't think is in the physical act of trading. I don't think that's my anxiety, but I have all these other, you call them subconscious. They're not subconscious for me. It's like, okay, did I give the dog her medicine this morning? Is my pool pump going to be fixed before the big freeze? So I have all these little, these things in my head, right? That I can't sometimes get out of my head while I'm supposed to be focusing on the trade.
Yeah. And again, very common. So I would say incorporating practices like mindfulness and meditation. So we can't always, it would be a personality transplant nearly to completely stop worrying about those things. And it's very human. You've got a lot on your plate, you have to-do lists, all of that. It's about creating short windows of time that give your brain a rest, that allow you to recharge. So that could be 5 minutes of deep breathing or mindfulness meditation. And that, there's a lot of research to say that actually helps anxiety levels, helps calm you down, helps your focus and attention. There's loads of benefits to doing that. So sometimes people think, again, it's black or white. It's, I have anxiety or it's not there at all. I'm not worried about anything. And, I'm not thinking about my to-do lists, but it's actually more about finding balance and just finding windows of time, little 5-minute windows where you give yourself a break from it so that you can recharge and then allow it to happen again. So I would approach it in that way, actually, more so than trying to completely eradicate it, which is maybe unrealistic.
Okay, so that totally makes sense. I mean, I literally in the break text my pool guy, come fix the pump. But let's talk about burnout for a real quick second. So do most people recognize when they're burned out?
Absolutely not. No. And it's, again, something I see all the time. A lot of people actually are more frustrated, or the high achievers. So when I'm talking about the traders I work with are high achievers, if they're bothered working on psychology, they're usually very motivated and very disciplined in terms of, doing everything they can to improve as a trader. So more of what I hear, like I will see that they're burned out, but in their minds, what they're saying is, why can't I cover everything on my to-do list? Like, why aren't I being effective enough or efficient enough? Like, why aren't I getting it done? Why don't I have the results? So they're not actually sitting there reflecting and saying, I'm feeling really burned out and that's the thing I have to deal with. They're saying, I have all of these things I want to achieve, and like there's a gap between where I am and what I want to achieve. So how do I close it? Whereas the solution is actually working on the burnout, taking more off their plate, and that would actually free them up to perform at a much higher level. But it takes a bit of a leap of trust and a switch in mindset to see that doing less can actually produce more, especially in trading.
Got it. That makes sense. I appreciate that answer. I want to pop up, we're getting close to the end here. I want to pop up the new website. If we could share this on the screen. Looks modern, fancy.
Thank you. Like I said, it was a lot of work, but no, I'm very happy with this.
So you got a couple of things for people to look at, right? So this is the same URL, right? Create a performance.
Yeah, same URL. So the main thing I would direct people to is that free masterclass for traders. So that would be kind of an hour training that talks through some of the most common challenges that traders face from a psychology perspective and some practical solutions to deal with that. But then I have also some just resources like meditation. So we spoke about using meditation and stuff there. So there's free meditations, there's blog articles, things like that. So there's quite a lot of resources there on the website too.
Very awesome. All right, folks. If you get a chance, pop over to the website and poke around a little bit. Oops, sorry about that. I didn't mean to put the chart up. That was my bad.
That's all right.
In any event, that was awesome. I appreciate your time today. I'm glad that you were able to pop in. I know we're at the end of the calendar year, so I just want to wish you happy holidays and a happy new year.
Same to you and your family and to the whole team at NinjaTrader as well. So I hope you do get the time to take that break and completely switch off from trading as well. So do refresh yourself.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.